Yes, perfectly fine. Okay, trying, and we will be trying to stick to half an hour initially allocated, but do not hesitate to make a sign that we are approaching end of our time. Okay, this is just the cover slide. You have our names for any future reference. Let me go immediately to the outline, what we have prepared for you with Quentin. Yeah, you might need to click again so that the whole outline shows. Okay, well, the first somehow the outline slide did not work, but I do recall that first of all, we would like to explain where the Innovation Fund sits in the delivery of the European Green Deal that you very well know is one of the key priorities for the current Commission. Then the second point is providing you some basic information about the Innovation Fund operation, governance, the calls that we had conducted so far, and the projects that were awarded so far. Then we move to the connection between Innovation Fund and the REPowerEU plan from this year, which sets a number of priorities and makes Innovation Fund instrumental in delivering them. And then we will be talking about the newest call for proposal that opened in November. And then the last part, the fourth part of the presentation, will be devoted to one award criterion, project maturity, one among five. Why we will focus so much on this? That will be Quentin's part, because it is the most difficult one, and this is the one that actually feedback from project applicants and also investors would be very much welcome. We also have some best practice to share with you on this specific criterion. So first of all, I promised the link with the European Green Deal. Well, when you look at the aspects of European Green Deal, you can see that actually Innovation Fund can contribute to all of them. But to be very precise, where Innovation Fund focuses is on highly innovative technologies. It is not fund which is targeting deployment of existing technologies. Our focus is innovation. And then for this innovation, we are seeking flagship large-scale demonstration, first of a kind commercialization projects, which need to happen in the EU, but also Norway and Iceland, and which also deliver significant greenhouse gases abatement. Those innovative technologies, they are sought in so-called hard-to-abate sectors, notably industry. And we already had some success with that. Well, none of these projects yet started operating. Like I said, we are a very young program, but we have awarded already the projects on this kind of technologies. You will find projects on green hydrogen, on carbon capture utilization, or carbon capture and storage, power to X, power to energy, notably negative emissions. All those technologies that we know that need to be demonstrated by 2030, so that they can be mainstreamed in time to achieve climate neutrality by 2050. For the calls that we already awarded, we already have 200 million tons of greenhouse gases abatement expected over 10 years. This is a significant number. With this, we can go to the next slide, please. Very quickly, this is the result of the Commission's own modeling exercise, showing our pathway to climate neutrality. So you see, we are still having substantial amount emissions to abate. We have to be very strict. We have to have very ambitious policies that we are putting, notably with Fit for 55 package, to get us to this target of minus 55%. Well, with recent progress in the trilogues, maybe we will be overshooting even this target. You must have heard executive vice president talking about 57% reductions, but our legal target for now is 55%. And then you can see from this graph actually that whereas for some sectors the abatement progresses very fast, already by 2035 we have almost no emissions left. This is the case. This is the case for light-duty vehicles. This is the case for the power generation. There are sectors which are hard to abate because we don't yet have fully demonstrated technologies to achieve abatement, notably in the industry and long-haul transport. So this is where Innovation Fund brings important contribution by bringing this innovation and making sure that decarbonization can also happen, notably in industry and in transport fuels for the heavy duty or long haul transport. We can go to the next slide, please. That was, I think, that was the previous one. Okay, the one with the several yeah. The next one then. Sorry, the next slide, please.
Can you hear me?
Sarah, can you move
Yes.
to the next?
This one. This one. This one is pretty dense, but let me tell you quickly how to read it. You have an overview here of many, not all of them, EU-level funding programs for the clean tech, so to say. So it all starts with, of course, Horizon Europe, which finances research. Then it goes to European Innovation Council, which is more on the early adoption, startups, providing equity to them. LIFE program, which provides grants, and then you have Innovation Fund and the sister Modernization Fund, both 100% financed from the revenues from the carbon market, by the way, which intervene at the latest TRL levels and just before full, very advanced commercial readiness levels, before programs like Connecting Europe Facility or InvestEU or commercial lending going beyond EU programs can take place. So here we target projects which are mature enough to do large-scale demonstration, first of a kind commercialization. So they are out of the pure research. They actually should be at the quite high levels of TRLs, but they are not yet ready to fly with their own wings and get financing from the commercial banks. They are still in need of the grant. Most likely, they are not bankable even to go and pitch to the banks or to the private sector investors. So here we are. Yes, I see. I keep one eye on the chat, which I probably shouldn't do. A question about ERDF, so structural funds. Yes, they should be there, probably together with Connecting Europe Facility. Here, intention was to pull the funds which focus on the clean tech. So not the first reflex to put structural funds, but yes, there should be part of this picture as well. So they would be after the Innovation Fund for more mature, more commercially ready programs. I would also draw your attention to the fact that under Innovation Fund today we operate with grants, but we are currently gearing for a new way of support for the contracts for difference, so providing top up to the revenue from the market in order to have a slimmer, more agile also form of compensation. And those contracts for difference would be to be won through the auctions. I will have a dedicated slide for that. But still today, Innovation Fund provides grants, both for the small scale and large scale projects. Also, it provides project development assistance, and the future is still keeping, of course, grants and PDAs, but also having those contracts for difference. We can go to the next slide, hopefully. Yes, here still the very basic information. I already told you we are a very young program. Our first call for projects was in 2022. Importantly, we have calls for the small-scale projects, which have capex up to 7.5 million, and everything beyond that is large-scale projects, and for them that we have dedicated large-scale calls for proposals. The total available budget under the Innovation Fund is dependent on the carbon prices, because Innovation Fund is fed with something around 5% of the EU ETS emission allowances which are auctioned. So 5% of that is earmarked as revenue for the Innovation Fund. And now, depending on the actual price of the allowances, we have bigger or smaller budget. Currently, we make assumption that those allowances till the end of 2030, they will be sold at 75 euros on average, and that gives us a budget of 38 billion, and that's of course for the 10-year period. The aim is to avoid emissions, boost competitiveness by bringing innovation, and then we have 4 areas of eligibility, which are energy-intensive industries. The precise list of them is exactly the one which is the coverage of the emission trading system. You can find it in the Annex 1 of the EU ETS directive. Then we also have renewables, energy storage, carbon capture, use and storage, and importantly for the renewables and energy storage, we also have clean tech manufacturing of not only use of renewable energy or use of energy storage, but also manufacturing of components and equipment. I will go now to the next slide, please. Key information that you need to have also in order to have a good discussion about ways of improvement, lessons learned so far, and the way forward is about what we are assessing in order to award grants. So both for the small scale and for the large scale calls, we assess first and foremost degree of innovation. So for projects to even enter the competition, it has to go beyond the state of the art in its sector. So first of all, we check the degree of innovation. If this is not the case, if this is just a rollout of existing technology, even if it would have a huge impact on GHG abatement, it simply would not progress further in the evaluations, which is organized in the cascade system. Then we check GHG emissions avoidance, both absolute and then relative, so compared to a reference scenario. We also look there, of course, on the quality and credibility of the calculations. We have quite an extensive methodology to argue those emissions abatement consistently and in a comparable manner across the projects. So it is not that everybody comes with their own methodology and they make their claim. No, they all have to play by the rule book. Then the project maturity that I already flagged as the one which is the most difficult, because we also look for the chances of this project to happen, meaning that we want to be assured that when we award it, this project will indeed get to the final investment decision and it will start operation in reasonable time. Then we have also scalability. You can certainly see that from the perspective of public authority, we wouldn't like to spend scarce public resources on a project which is cannot be replicated because it's such a special solution. No, we want that it is a demonstrator and later can be replicated. Then cost efficiency, actually it's the simplest one, because it's a formula which combines grants requested, possibly also with additional state aid, because we allow to accumulate the state aid and our grant, and this divided by the emission absolute emission avoidance. From that, we have a sort of cost of support per ton of GHG abated. which enables us to judge cost efficiency of the project. State of the art for the large scale call is on the European level. For the small scale call is on the national level. I will try to do justice to all the questions maybe after presentation. I just spotted this one easy to answer. We can go to the next slide, please. Key information about the past projects. We already have 37 projects awarded, both large scale and small scale. We have covered so far 15 member states, 15 countries. There was also Norway in them, and Iceland as well. Like I said, they are covered by ETS, so they can also benefit from the Innovation Fund. 77 beneficiaries because we have consortia applying for the projects. You can see that hydrogen, energy storage, renewable energy seem to be the biggest parts of the pie. And we have the highest number of projects in those sectors indeed. And then the projects under the last large-scale call, which were pre-selected, they haven't yet signed the grant agreement, so we cannot really pull them with those on the left-hand side. There was 17 projects, and here composition a bit different from this latest call. Cement and lime, chemicals. They have I don't see anymore the green part. It is probably hydrogen, yes, because we had a number of hydrogen projects in there as well. This last call alone was worth 1.8 billion grants. I do encourage you to have a look at Innovation Fund dashboard, project fishes, which describe all the previous successful projects for inspiration, to see what kind of consortia were behind them, what kind of technologies they implement, how they go beyond the state of the art. We can go to the next slide, please. Here I am already in the third part of the presentation, so the newest developments, which are against the background of the REPowerEU plan that all of you must have heard. So you know it comes as a reaction to the war in Ukraine, trying to decrease as much as possible and as fast as possible dependence on important Russian fossil fuels. You know that the big objectives are energy savings, deployment of renewables, and diversification of energy supply. And all of that is underpinned by the smart investment. And here this graph presents you the main areas of the smart investments, and you can find their Innovation Fund, which was called to accelerate deployments and to match the priorities of the REPower plan with the dedicated topics, which was a novelty for Innovation Fund. It is not at all novelty in the EU funding programs. Horizon Europe has been doing topics for years and years now, but for Innovation Fund, yes. And also creation of the new tool, which is contracts for difference, or carbon contracts for difference. We can go to the next slide. So what is there in this acceleration and those topics? Well, now we have it all published on the 3rd of November. So this is the third large-scale call, or if you prefer 2022 large-scale call, which has a budget of 3 billion euros, plus even 20% flexibility reserve, which could get us to 3.6 billion. All of that to be awarded via grants. Maybe that hasn't showed yet on my slides, but we have the size of the grants, which is something between 20 million euros under the large-scale calls, going up to well beyond 100. There were some grants also for 180 million euros. So these are for large, very large industrial projects, and yet sometimes they represent only a silver of the total investment needed for those projects, because we see that from the entire cost calculations. So we have this very, very big budget now available that was made possible thanks to the higher revenues from the carbon market, and which is split into 4 topics. There are 3 REPower topics. One is on electrification and hydrogen applications in industry. The second on the clean tech manufacturing, so what I was explaining as additional focus of Innovation Fund. And one on the pilot project, sort of bridging the gap between the classic Horizon Europe operation and Innovation Fund, where we ask projects to be mature. So for pilots, obviously much more difficult to argue, but as we need those technologies to be first piloted, we need this bridge between Horizon and the first of a kind deployment. We created for them dedicated topic. Without, of course, we have those 3 REPower topics, but we don't lose from sight, we don't lose the opportunity of the full Innovation Fund eligibility. And for all other topics which don't have this dedicated REPower topic, they have general decarbonization topics still with the 1 billion euros. We can go to the next slide, please. Key features of this newest call. It opened on the 3rd November. Deadline is 16th of March. We already received a number of questions via helpdesk, which shows a vivid interest in this call. We had very successful info days last week with 2,500 people connected at different points of the day. I think it was a lot to take during those info days. But yes, we were followed by a number of people, and now recordings are available on the CINEA website, so available for everybody with good tips how to make applications, lessons learned from the past projects, discussing in detail the scope of the specific topics. Award criteria I already explained; they are unchanged from the previous calls, and then maybe interesting information about the grant distribution. So this is still grant distribution, working in terms of lump sums for those of you familiar with the EU programs, quite a usual approach. Importantly, 40% of the grant can be disbursed at the financial close. So this is what can be used for the construction, whereas 60% is after financial close, and it will be targeting more. Well, it can still be for the construction, but more for the operational phase. And this 40% is a given. Even if in the monitoring something doesn't work out for the project, this 40% is part of the risk that we are taking, so it doesn't have to be reimbursed. Since I mentioned monitoring, very briefly, what happens after project gets awarded? Well, first of all, it needs to go for the financial close. Then it needs to enter into operation. And when it enters into operation, we will monitor it in terms of GHG abated, which need to happen against what was claimed in the application, not to the last kilo of CO2 emissions. We have tolerance of some tolerance, but at least 75% of what was claimed in the application of the abatement needs to happen. Otherwise, the grant would have to be returned. I can go to the next slide, please. This is my last slide. Normally, this new tool of the competitive bidding, contracts for difference, or carbon contracts for difference. Maybe some of you heard it in the context of the EU Hydrogen Bank, which was announced in the State of the Union this year. So yes, this new tool of the Innovation Fund, currently being developed. You have a schema how it could work on the right side of the slide. I will not go into details. So having auctions and providing different form of than the grants is currently being prepared. It was in fact already proposed under Fit for 55 package as part of ETS directive revision. Now it accelerated, is more in the spotlight because it is one of the main options for the delivery of the domestic leg of the EU Hydrogen Bank. We had a dedicated workshop on this 21st of November. You can easily find the recordings, presentations online. And the next slide is probably already, yes, it's definitely for Quentin. Quentin, are you ready to take over?
Yeah. So thanks, Ewelina. So as you mentioned, financial maturity is probably one of the most challenging criteria under the Innovation Fund. Innovation Fund is a competitive call. It means that only the best application, so the application who scored the best in the 5 criteria will be selected. Under financial maturity, we see that 50% of the application actually failed the financial maturity criteria. You could say, okay, why does the Innovation Fund assess maturity, as it is principally innovative solutions which are targeted in the Innovation Fund? This is quite important. It's because maturity, according to the way Innovation Fund sees it, is not about having a perfectly mature, commercially mature project. It's not about that. It's about maturity. It's being able to present to the Innovation Fund a project which is enough substantiated, where you could prove that what you intend to do will effectively be done. And so in the financial maturity, we are not looking at projects which could claim to be exceptionally profitable or commercially profitable. No, financial maturity for Innovation Fund is the fact that you have to prove that you will be able to reach the financial close, and you will be able to fund the project and to get all the elements of the funding ready. Financial close, and that's also really important, financial close for Innovation Fund, it's the moment where all the contracts, so technical contracts, but also financial contracts are signed and where all the conditions in them are met. So it's a very strict definition for financial close. And in the application for Innovation Fund, you will have to explain to the expert who will evaluate the project, to explain to them how do you intend to reach this financial close. And in order to do so, you will need to substantiate your hypothesis. You will need to provide letters of intent. You will need to provide conditional contracts, for instance, or strategies to reach offtake agreements, strategies to reach the permitting process, etc. These are the elements for maturity. So maturity, it's not about having a commercially profitable project. It's about proving that you will be able to reach what you expected to reach, what you want to reach. For investors and banks and financiers, it's also important because, as mentioned, they will have a big role in order to be able to prove the maturity aspect, especially in the signing of a letter of intent, of commitment letter in some instance. On the weaknesses, weaknesses for Innovation Fund, it's when you have some troubles in the application, which actually leads to fail the application as a whole. We have 6 major significant weaknesses identified under the financial maturity aspects. The first one is directly linked to financial close. It's when you have a project which is not profitable. So, okay, project doesn't generate revenues, and for which there is no commitment from shareholders, for which the financing plan is not credible. So it means that actually the applicant presented a project which is not economically viable and doesn't mention us that is followed by shareholders. In this case, actually the expert usually consider that it's not credible that in the future this applicant will be able to attract funding because he presents us a non-profitable project. In this case, if he would have presented us, for instance, a commitment letter saying from shareholders, yes, we as future shareholders, we know that this is a project which is not profitable, but we still will want to invest in it because, for instance, it's a strategy from our company, or because we expect that in the future it will be able to scale, etc., etc. This could be then interesting way to mitigate this risk of non-profitability. The second aspect is when you don't have a credible business plan and where your assumptions are not substantiated. There it's a question really to be credible. If you present us a business plan which is profitable, but with an hydrogen price of 20,000 euro a ton, it's possible that the expert will consider that as not credible. But if you present us a business plan with hydrogen at 22 euro a ton, with offtake agreement, of conditional offtake agreement, mentioning that you are able to find a offtaker willing to pay this price for the hydrogen, then you are providing a substantiation of your hypothesis, and then it's become more credible then. The third aspect is when there are inconsistencies. In the Innovation Fund, we ask you to provide us a lot of documents. If the hypotheses of the data between these documents are not consistent, then we will fail this application, because we will not have any way to prove, to see which were the data which are actually consistent. The fifth aspect is when the risks are not identified or not mitigated. It's also really important. If you present us a really profitable business plan, but where no risks are identified nor mitigated, what's still the credibility of this business plan? It's a bit doubtful in this case. And finally, it's when the scope of the business plan is not substantiated. So it's when, for example, you didn't take into account the full value chain. An example could be that you are doing a carbon capture and storage project, but the storage is not in the scope of your project, and you don't have any proof that you could be able to have a storage place for this carbon. In this case, the scope of your project is wrong and the risks are not mitigated. So you see, in all this significant weakness for financial close, the role of the letter of intent of stakeholders or shareholders is really important. Yes, next slide, please. When I mentioned profitability, you see here in this graph, what are we seeing? We see in the horizontal line, that's the scores of the application. So 5 is the maximum and 1 is the minimum. And then we have the net present value. You see in the red, these are applications which has presented us very profitable projects, but which failed nevertheless. It really means that profitability is really one of the indicators which could present us a possibility for financial close, but it's really not the only indicators or not the most important aspect for financial close. And the project here which had failed could have failed because the risks were not substantiated, because the scope was inappropriate, because there were inconsistencies, etc. These are always kind of the same mistakes of significant weakness. On the other hand, in green, we see applications which have a very low profitability or even a negative profitability, but which have scored well under the Innovation Fund, even they have a low profitability. This is mostly because they were able to substantiate the fact that they are able to attract shareholders even though they have a low profitability. So there is a balance to be able to reach. If you have a very profitable project, then okay, the assumption will probably be that it will not be a big challenge to find shareholders, and you will not have to go too far in order to substantiate that. But if you present a very unprofitable project, then you will have to go deeper in order to present us a proof that you are able to find shareholders. You will have to provide letters of commitment and not just letter of intent. Well, that's the next slide, please. That's actually the 7 rules. Just on the profitability, yes, profitability is could also already include public funding. So indeed, and again, I go back on the profitability aspect. That's also where, as banks, as investors, you could have a big role to play. We see in several applications letters of intent from banks, which are, very generic. Which are mainly saying that they know the applicant and that maybe they will one day study the project if they are presented to them. These kind of letters are nearly useless. It doesn't prove anything. It just mentions that the banks know you. If, on the other hand, you are able to get from the bank an indicative credit offer, even indicative, even non-binding, it already proves that the bank has studied your project and that she potentially is willing to go with you, provided that some conditions are met. It's completely other story. Because then you have the conditions, you have an interest rate, you have all the condition precedents. It's far more stronger, even if it is also indicative. On the 7 rules for financial maturity. First of all, outline the scope of your projects and the way it's structured, in which kind of legal entity it is. Secondly, prove and identify the risks. So again, risk is really important. A business plan which does not identify its risk and mitigate them is actually not credible. Third, you have to ensure that you are able to fund your project. And so you have to receive commitment from the potential funders. Or less profitable your project is, how far you have to go in order to prove the commitment. A very profitable project has obviously less need to prove any commitment because probably that you will not have trouble to find an investor for a very profitable project. The fourth element is also really important. In the innovation fund, we ask for the WACC. And the WACC is one of the parameters which will allow us to calculate the grant amount. The WACC has to be the WACC calculated according to the innovation fund methodology, even if the result gives a WACC which is different from your own internal WACC. That's really important. You always have to use the innovation fund WACC, which is defined in the methodology. It's because we do that in order to ensure equality of treatment between the applicants, so that all applicants are using the same way to calculate the WACC and are equal to that. Fifth aspect, to give evidence of preliminary contract. So I spoke to that a lot. Please provide evidence on your assumption. Explain to the expert why you have taken these assumptions and on which basis are your assumptions constructed. And sixth, as I mentioned, please justify. And 7, do not forget the competitive landscape. If all these elements are aligned and are met, then it's probable that you will have good scores in financial maturity. I could tackle some question mentioned in the chat. I don't know. Yes, the one question is really important. It's about the monitoring period, and then I will let Ewelina take the lead. Monitoring period and the 3 to 5 years. We receive a lot of questions of that. In the call text of the Innovation Fund, it is mentioned that the duration of the project is 3 to 15 years, or 3 to 5 years for pilots. You have to be aware that the notion of duration, according to the Commission, the duration of our project is the time during which the project is followed by the Commission. So it's not the lifetime of the project, and that's really important. So when you see in the call text that the duration of the project is 3 to 5 years, it's not the duration of your project, it's the duration of the monitoring of your project by the Commission. So in your application, you have to present the real expected lifetime of your project and not limit yourself to 3 or 5 years. It's a point which is really important. So I want to really insist on that. Thanks, Ewelina. I'll let you the lead.
Thank you, Quentin. I would actually leave it to Daniela to tell us if we take now the questions. Indeed, there is a good number of them on the chat, or we go straight to the mural. You are masters of ceremony.
Thank you very much, Ewelina and Quentin. Thank you for the presentation. I think if you are okay, you could take some of the questions, and then we can go through the mural afterwards, since this seems to be interesting for people. Yeah.